Equities turned positive, focus shifts to NFP data. Wall Street stocks rallied on Tuesday, erasing most of the losses from the previous day's sell-off. Fresh data showed that the ISM non-manufacturing activity index edged up to 61.9 last month from 61.7 in August. As such, the sector continued growing in September and at a faster pace than economists expected. The S&P 500 index rose 1.05%, the Dow Jones gained 0.92%, and the tech-heavy Nasdaq climbed 1.25%. Despite the recovery in U.S. markets, Asian stocks were lower on Wednesday amid ongoing worries about rising inflation, tightening monetary policy, and the Delta coronavirus variant. The Reserve Bank of New Zealand announced a first rate rise in 7 years. The central bank signaled that further removal of monetary policy stimulus is expected over time, contingent on medium-term outlook for inflation and employment. Japan's benchmark Nikkei 225 sank 1%, South Korea's Kospi dipped 1.8%, Australia's S&P ASX 200 shed 0.70%, and Hong Kong's Hang Seng fell nearly 0.6%. Trading was closed in Shanghai for a national holiday. European equities closed lower, with the Pan-European Stock 600 falling over 1.0%, despite U.S. 10-year Treasury yield retreating from more than 3-month highs. On that data front, German industrial orders fell more sharply than expected in August, while Eurozone's retail sales rose by 0.3% on a monthly basis in August versus 0.8% expected and negative 2.6% last. In the U.S., equities ended higher for a second day in a row on Wednesday amid signs of progress on a debt ceiling debate. Meanwhile, a report from ADP showed that 568,000 private sector jobs were created in September versus 425,000 expected. On the negative side, the previous reading was revised down from 340,000 from 374,000. Now investor focus shifts to a closely watched non-farm payrolls report due on Friday. During the session, the Dow Jones Industrial Average gained 0.3%, the S&P 500 rose 0.4%, and the Nasdaq Composite Index added 0.5%. In individual stocks, Microsoft rose 1.5%, Amazon gained nearly 1.3%, and Alphabet advanced 1.1%. In currencies, the dollar extended gains to notch fresh highs on Wednesday before steadying early on Thursday. The Euro-USD is slightly off mid-2020 lows seen at 1.1530 yesterday, looking vulnerable to further losses despite the oversold conditions. On the data front, industrial production in Germany dropped sharply by 4% on a monthly basis in August versus a 0.4% drop expected. On an annualized basis, production rose by just 1.7% versus 11.4% expected and 6% growth reported in July. Tracking a rally on Wall Street, Asian stock markets rose on Thursday amid reports that Washington and Beijing had agreed to hold a virtual meeting before the end of the year. The MSCI's broadest index of Asia-Pacific shares outside Japan jumped 1.25%. Japan's benchmark Nikkei 225 gained 0.54%, despite the Bank of Japan slashing its economic assessment for 5 of Japan's 9 regional economies in its latest quarterly report. Australia's S&P ASX 200 added 0.7%, while Hong Kong's Hang Seng surged 2.6%. Trading was closed in Shanghai for a Chinese national holiday. Elsewhere, oil prices corrected lower from fresh 3-year highs on Wednesday. Brent crude peaked around $83.50 before retreating to the $80.60 area. Today, prices have settled in the $81 region, struggling to see a more sustained recovery. Earlier in the week, oil futures received a boost as OPEC Plus announced it was sticking to a plan to increase production by 400,000 barrels per day for the month of November. However, Brent crude failed to hold around fresh highs as the U.S. Energy Information Administration said U.S. crude inventories rose by 2.3 million barrels last week. Gasoline inventories also rose, while distillate inventories were down slightly. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.